Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. Tonight is October 24th, 2017, and tonight we're going to be talking about wheat because it's a market I haven't actually spoken about. So wheat's the market, WEAT from Teucrium, which is a ETF, which we'll track on the long side wheat. For right now, it's the short side we're really focused on, but you'll see in here in a second why it is that I'm excited about it. So short, intermediate, and long term, they're all pointed down, all negative, as should be expected with the experience with wheat. We have a mixed technical rating with wheat as of right now, but here's the key here. Wave low was just triggered. So if we flip over to TradeStation, we'll take a look at wheat. These are daily bars. Let me go ahead and scrunch this up a little bit to make it a little bit easier to see here. Here is the most recent wave low trigger. It's this dark blue line. We had one not too long ago as well, which would have occurred on the 12th of October. But right now we're on a wave low that is just recently triggered, and it's this key support that just continues to hold the market. And I always look for a consolidation period. Obviously it's in a consolidation period. You can see that it's been moving sideways. Our energy level, anytime we dip the blue line, which is the energy level itself, dips below this yellow line, that's when you get into a consolidation period. It has broken above it, but it's still on the low side, so it's not in an official consolidation period as far as a really tight consolidation, but just looking at it you can see that it still is in this consolidation. The key here is that the yellow line represents the 50-day moving average, and that the market thus far has been ping-ponging back and forth between our signal level, our official support level, and then if we use the 50-day as the upside to the market, at least temporarily, that it is also going back and forth between that. So hence there's a consolidation, and one would expect some type of an explosive move to occur after you've been in this consolidation period. Wheat has been a tough market to trade. It has not treated the longs in any way, shape, or form in a good way for such a long time. So to even think about going long is probably premature. But we're setting the stage for something here. So if we flip back to the website, I'm pointing out that our depth gauge, which is, think of it as not just a normal indicator, it looks at the risk associated with the market, and the blue, just this vast ocean of blue, the heaviness of the ocean, the weight of the ocean has been weighing on wheat for quite some time. And when you get to extreme levels, especially when you're at that support level, as I've been indicating, sometimes the market has a tendency to rebound. It's just the weight becomes so great that something has to give. And so I point this out whenever we have an opportunity with a market such as wheat, which has been in a prolonged bearish phase here. So it's obviously still bearish and falling, which obviously it still is, but this is going to be a slow moving type indicator, so it will probably be the last to know when the market does reverse course. So let's take a look at the seasonals here. I'm just going to focus on the 10 years. You can see some choppiness. The dark triangle here represents where the market is right now. You see some choppiness, and that choppiness will lead us into, call it mid-November-ish, and that's when we typically see the next rally to the market. So I'm giving this deep dive in anticipation of something that's going to be happening well into the future here, but I'll also show you how we're actually trading it right now. So in any event, so by mid-November, that Teucrium ETF, WEAT, would be a great opportunity. And this is not, I don't look at seasonals from the perspective of looking at a specific day. Some people do that. I don't. I view it as a fuzziness that the market is generally going to be bottoming in and around a particular period, and then we would use it as an opportunity to increase our position size. That's typically the way that I look at seasonal tendencies. But there is to be some expected choppiness to the market. We'll see as to whether or not it actually dips to a new low, but by mid-November or so, we should start to, at least as a minimum, start to see the opportunity for a bullish move to the market. I'm going to also point this out because I don't always talk about it. This is just simply a monthly breakdown of opportunity by market. Just another highlight to the website. So in October, you can see that wheat, I know it's kind of small print, but wheat is got a kind of a bearish slant to it for this month. In November, what you'll see is that wheat has, it's not huge, but wheat does have a bullish opportunity to the market. You see a lot of bullish markets, and we could look at numerous markets, but for right now, I'm setting this up because I'm sure we probably won't be talking too much about wheat because of volatility in the market when we get to November, so that's why I'm pointing it out right now. So wheat will have an opportunity when we get into November. So that's all well and good, but how are we trading wheat right now? So if we come down to wheat, system actually went short, and it's toying with that support level that I was referring to earlier. So it is officially short the market. It's a short-term system, 120 minute. I expect a little bit of volatility, a little bit of bouncing back and forth. You're going to have to be agile here in the coming maybe 10 days or so with the choppiness that we would be expecting. But eventually, when we hit into November, going into mid-November, we would start to anticipate that we want to start to go long the markets. And obviously, we'll be well out of this particular position and theoretically into other ones that would be coming up here fairly soon. The other thing I'll point out here that we don't always talk about, you can come down to, you'll see this on the right-hand side of a lot of the different pages, market target or market trades. Grades, I should say. If you come down to the grading system and you pick up on grains, you'll see that wheat is actually a good market to be trading just based upon its personality, where it can have prolonged trends, which are obviously very good for us, and they can have opportunities where they have these sharp spikes, short-term oriented, and you can be able to take advantage of that. That's what I would anticipate with the choppiness to the market over the coming I don't know, 10 days or so. Then what I would anticipate that seasonal trend that I was referring to here, that we would start to see more of a bullish bias and really be able to take advantage of the swing to the market. So as of right now, when it comes to the conditions that are underway with the deep dive, the wave low has me a little concerned with the short position, and I guess we'll see how things kind of play out here. So we'll continue to monitor that, but bear in mind that between now, given the wave low, and the seasonal lows that typically occur in the market mid-November, as I was talking about, between that, because we've been in such a tight consolidation here, just come back to TradeStation, because we've been in such a tight consolidation, I would anticipate that an explosive move is going to occur here fairly soon. It's like a spring that is wound up. It's wound up, it's wound up, and that when that energy expands, that you're going to see a good move come within the market. And we have some resistance to the market, up through here. We use the 465 and and a quarter-ish. That's where the market theoretically could be heading if we get some type of an explosive move to the downside. This short-term trade that's underway for right now, I would anticipate that it's going to ping pong back and forth around here. We'll liquidate that position, and I would be looking for a condition between now and mid-November, specifically on the ETF side, the WEAT, that might be a good opportunity to take advantage of some type of a swing. But realize that the trends in certain cases can be abrupt and fast and very profitable but they can happen on a moment's notice. So that's why I'm sort of going through this particular market right now in such detail in anticipation of some type of a swing, even though our systems are short the market, and I'm looking more so in time for a bullish breakout to the upside. So we'll see how the systems play out, and we will review another market tomorrow. Thanks very much. Bye bye.